Hello, in this lecture we'll continue on Chapter 24, Responsibility Accounting. Responsibility accounting systems, an accounting system that provides information that's related to responsibility of individual managers and to evaluate managers on controllable items. So responsibility accounting, the idea that we're going to break the company into separate departments. We're clearly going to have management in charge of those different departments, and we're going to need to hold those managers accountable for those different departments and the performance of them. In order to hold someone accountable, we need to first know what they're doing, what they're in charge of, as well as what they have control over. So that's the idea of the controllable costs. So we want to make sure that we know what they can do and what they cannot do, and measure them on what they have control of. So successful implementation responsibility accounting may use organizational charts with clear lines of authority and clearly defined levels of responsibility. The more decentralized we get, actually, the more detailed we kind of need to get in terms of an organizational chart and the lines of authority. And that's because it's very easy once we have different departments taking care of different things for things to fall between the lines on who's in charge of what. It's very easy for individuals to feel like they've been judged unfairly because they didn't know if they were involved or something, or because there is this divide between who is in charge of what. So we need to clearly tell people what that is, what they are in charge of, and then we need to have clear measurements in terms of how we're going to measure how they're doing on that, and so that we have incentives for individuals, because people respond to incentives, and we need to have the appropriate knowledge of what is expected. We need the appropriate incentives, and then we need the appropriate evaluation of those goals. So we could have something like this. We have the board of directors in this case. And of course, remember, if we're talking about a corporation, then we have stockholders who basically vote for our board of directors, who would then hire the president. And then in this case, the president is hiring the executive vice president, the executive vice president of operations, the executive vice president of finance. So there's our separate departments. Then we got the operations is going to be broken out by region, in this case, Southwest region and the Northwest region. And then the Southwest region is where we're going to focus on, is now broken down to the beverage department, the food department, and the service department. So the lines need to be clear in terms of who's in charge of what in all of these departments and how they're going to be held accountable. So responsibility accounting performance reports. Amount of detail varies according to the level of the organization. So a department manager receives detailed reports. So the lower level on the management is usually going to get a lot more detail on the reports within their control. They are then going to summarize that and help to create the summarized reports that more upper level managements will have. So the higher up the management we are, the more summarized the reports we will have. If we want to get more detail on a particular report, then we're going to go to the department and see the detail behind the summarized reports we have. So it might look something like this. So here's an example. The executive vice president of operations may have a report such as this for controllable costs, which includes, in this case, the salaries, the quality control cost, the office cost, the Southwest regional cost, and the Northwest cost. And this is for July. We've got the budget, the actual, and the difference. And of course, this is what we're going to be looking at, the differences in these line items. We're going to drill down on the Southwest region here, and the difference being 2,800. If we do that, then we go down to the controllable costs within the Southwest region, and now we have salaries within there. We got the depreciation, we got the insurance, we got the beverage department, the food department, and the service department. And of course, the beverage department is the highest amount here. And so we're going to drill down on the beverage department. If we want more detail on that, we can look at the plant management beverage department, where we have direct materials, direct labor, overhead, and so on and so forth. So direct and indirect expenses. Direct and indirect expenses. Direct expenses are incurred for the sole benefit of a specific department. So a salary of an employee who works in only one department. So direct costs are very easy for us to allocate to a particular department. We're just saying that individual works for this particular department. If they're in the beverage department, we're applying all their salary to the beverage department. But of course, we're going to have a lot of things that overlap where we're going to have to try to figure out how are we going to apply this cost out. For example, those would be called indirect expenses, benefit more than one department and are allocated among department benefit. So multiply department share, rent, electricity, heat. So if we're in the same building then, and there's different departments in the same building, the utilities in the building, the maintenance in the building, are all types of things, the rent on the building, the depreciation, things that should be applied to the two different departments. Let's say there's two of them. And we might be thinking, well, how could we do that division? How could we apply these costs? And the first thing that would come to our mind might be a nice simple division problem. We just take the utility, divide it by 2, and apply it to the departments. There is a problem with that, though. There could be a problem in that it might not be as efficient as it should be, in that one department might be a lot larger than the other department. And so, or one department might use a lot more utility or whatnot. So while that division might be a way to go, we're often going to try to use some kind of ratio in order to make a more precise estimate. And generally, it's not too difficult to do that much of the time. For example, Classic Jewelry pays its janitorial salary $800 per month to clean its stores. Management allocates this cost to the 3 departments according to the floor space. So if we're talking about a janitor that cleans 3 different departments, then we could just take that 800 and divide it by 3. But it might make more sense for us to say, well, which department's larger and in terms of floor space? And maybe we make an allocation based on the department that has more square footage to clean should be allocated more of this cost to their department, to their budget. So if we did that, then it would look something like this. This is a very common ratio analysis, and it's good to understand this because it could be applied to many different things. So if we had the square foot of 2004 for the jewelry, the watch repair 600 square feet, and the china and silver 1,000, that adds up to 4,000. Then if we do a analysis in terms of the square footage for the jewelry, this number divided by this number, we get 60%. The 600 divided by the total 4,000, 15%. The 1,000 divided by the total 4,000, we get 25%. That adds up to 100%. Then we can take these percentages and multiply it times the cost for the maintenance and come up with a breakout of that cost of 480 to the jewelry, watch repair 120, and 200 to the china and silver. So that adds up to the 800. So that would be generally thought of a more fair distribution than just taking the 800 and dividing it by 3.